China has announced a preliminary duty on Canadian canola imports. The provisional rate of 75.8% will come into effect on Thursday.
Good morning, everyone, and welcome back to the channel. Today, we're diving into a massive story in the world of global trade, one that could shake the foundations of Canadian agriculture and stir up already tense relations with China. China has just slapped Canadian canola exports with a 75.8% tariff. That's not a small penalty. That's essentially closing the door to Canada's biggest buyer. And if you're wondering what this means for farmers, for trade, and for the global market, stick around because we're breaking it all down. But first, if you enjoy content that connects the dots between politics, economics, and everyday life, make sure to hit that like button. Drop your thoughts in the comments and subscribe so you never miss a breakdown like this one. Alright, let's get into it. So here's the headline. China has imposed a massive 75.8% tariff on canola seed imports from Canada. Officially, Chinese officials say this is about protecting domestic producers and responding to what they call unfair trade practices. But let's be honest, this is about way more than just farming. For context, canola is Canada's second most valuable crop after wheat, and China has historically been the #1 buyer. Canadian farmers have depended heavily on that export relationship. Now, overnight, that market is basically gone. This isn't just numbers on paper. This is billions of dollars in exports suddenly at risk. Now, let's take a step back and think about the farmers. Imagine working year-round, investing in land, equipment, and seed, only to wake up and learn that the customer who buys most of your product is effectively shutting you out. For farmers, margins are already input costs like fertilizer, fuel, and machinery are climbing. Add unpredictable weather on top of that, and it's tough enough to stay afloat. Now, a 75% tariff means farmers could be sitting on mountains of canola with nowhere to sell it, or forced to sell at a loss. And this doesn't just affect farmers. It ripples through entire communities, truckers, processors, local businesses. Everyone who depends on agriculture gets caught in the storm. So why is this happening now? Let's zoom out. Canada and China haven't exactly been on good terms recently. From political disagreements to past trade disputes, the relationship has been tense for years. This tariff feels less like simple market regulation and more like economic retaliation. China has a track record of using trade as a political weapon, whether it's rare earth minerals, wine, or grain. And now, Canadian canola is the latest target. What does this mean in the long run? Well, Canada will likely challenge this at the World Trade Organization, but those processes take time, months, sometimes years. Meanwhile, the damage is being done right now. And let's not forget the global impact. Canola isn't just about cooking oil or animal feed, it's a global commodity. If Canada can't sell to China, it will try to flood other markets, which could drive down prices everywhere. That means even farmers in other countries, the US, Australia, Europe, could see their profits shrink because of oversupply. This is how trade wars spiral one move in. Beijing or Ottawa sends shockwaves across the world. So here's the big question. Is this just a one-off move by China? Or are we looking at the beginning of a broader trade war that could reshape global agriculture? I want to hear what you think. Should Canada push back harder or focus on finding new trade partners? Drop your thoughts in the comments below. I read every one, and if you found this breakdown helpful, make sure to like this video. Share it with a friend who follows global news. And, of course, subscribe so you don't miss more deep dives into the stories that affect us all. Thanks for watching, and until next time, stay informed and stay engaged.